is someone called Sarah there? Sarah. Okay. We are going to start off. Like I said, we shall look JPY pairs. Then we shall look this pair, the news pair. We shall look this news pair which happened today. This is the card pair, those two, the JPY and the news pair which happened today. Those are the only pair that we are going to look at. Then others, we may have to wait. So let me start with JPY pairs. USD, JPY. Okay, let me do CAD JPY. CAD JPY. So we have this. This is the CAD JPY I shared you in the group. Let me get a clean one. So this is CAD JPY. We do the normal thing. How we start our analysis. We shall start with the premium and discount, which is on monthly. So we are back into our monthly premium and discount RI. So we need to mark our swing high or our range high, then also our range low. This is the range low. Then this is our range high here. So it shows we see where price is coming from and where it is going. So price started reacting from this fair value gap here. This is where it started reacting from. So it started moving from here, going where? To this external range liquidity or to this original consolidation or this range high. So this is where price is going to. So price started moving from the discount zone. If I use a Gantt box to make my range, this low, range low to this range high. Price is moving from this range low to this range high. We cannot, okay, when we are above 0.5, our appetite of buying reduces a bit, but still we have to buy until we reach here. So what do we need to know? We need to know anything which is on our sell side of the curve, because this is a sell side curve, this is a buy side. We use any PDARI, any fair value gap, which is fair, any order block which is fair to make an entry on this side here. So we shall use any FVG here, which is fair. We shall call it inverse fair value gap. It becomes our entry zone for buying. We shall use any order block here, which will become a mitigation block. We use it for entry for buying from this side. So what do? I start marking those key levels on higher time frame. So this is a mitigation block, a fail order block. So this was first zone to buy from. Then the second zone to buy from, you see this is this one here. This is what we call inverse fair value gap. That fair value gap which is violated. You see this gap and this gap. It is called inverse fair value gap or FVG. So you can put it another color depending on how you want it, depending on what you see. So for me, there are certain things I don't put on the chart, but I know what I'm looking for. So you can mark it any color that you feel. So I put this color. So this is inverse. The short price will go through, then come back, then continue. So it went through, then come back. So we are still looking for a buy because we are heading up here to this range high. So I'll go to the next time frame to get a clear range now. So I come here. I come to this time frame. There is no clear range. Let me go to daily. So when I come to daily, now I look for a range to trade. This is how I came up with the setup. So I use this range high here, and I also use this range low here. So I've used a smaller range inside the bigger range. So this is my smaller range. So this is my range high, and this is my range low. It shows price is below 0.5. So what do I look for? I'm going to look for a PDRI, which is below 0.5 and it is in discount. So we are going to buy from that discount. So which PDRI is here? There is this fair value gap here. So you can mark it like this. Now that is a very big fair value gap, which is in discount of this range high and this range low. So this is the origin of the move, where price is coming from. Where is it going? It's going here in daily. So this one happened yesterday, and today we are just continuing with this buy. So I go to R1 or H4 to look for a market maker's buy model and a sweep of liquidity. I can even mark here my sweep. You see here, this was a previous day low. This was the low of Wednesday price swept, then closed inside. So we are having already a raid in the market. We are seeing it. Now I'm going to go and look for other things for entry. So either H4 or I use R1. So I've come to H4, the one that I shared. I think it was H4. So when I come to H4 like this is my H4. This is the red that we marked. So you mark them. You call this the red here. Then we need to get our buy program activation. This is the buy program activation, which is the two source of. Then now someone can wait and see a church. Probably you can use this as a church, which happened today. So that one we call it change in character. So this is our church there. Now, where is our entry? We shall use this mitigation block or a breaker block as our entry. This zone here. It is also having a fair value gap there. So we have everything. This is a fair value gap. There's a breaker block. All of them, they are aligned together for our entry to buy from. So that was a clear setup to buy. So we shall just target this buy side liquidity. This is our take profit here. Then the take profit next is this one. So it might complete next week on Tuesday. We shall be somewhere here. But now we have our origin of the move, which is buy program activation, rate, change in character, entry, fair value gap. We are going up. So you can still do the same on H1 to see. You see how H1 is clear. It is just reacting right now, and we are going with it. Sarah. Stella.
They are not here.
Okay. So this is a chart. So price came back in New York because New York starts from 5, and we were having news for CAD. So by 4:30, price was here. This was our entry for a buy. So we are targeting, this was the nearest take profit which is coming, then we continue up to here. So this was a very clear setup that it was so direct. But remember, we don't trade here. For us, we trade when all these things are aligned. When there's red, when there's buy program, when there's church, when everything is aligned, that's when we trade. So it came back in New York. So there's a buy, which is going to happen. So price just tapped up to here. That is 49 pips. When you continue to this, that is 91 pips. So our next take profit will be this buy side here, this high. So if you hold it until it reaches that high, you're going to calculate, you're going to see from here, this was the first take profit. This is 55 pips. The second one is 97, 99 pips. Now, what do you want really? If you can see this, you just need to be humble you'll be bored, then you wait for those things to happen. So this one, it happened on a Friday. It gives us a good buy setup because we had news. You see this? This is the catalyst of the news driver. This one, the card news. It is the one which was driving this pair. This card unemployment and card employment. So they were the only one which were driving this setup, the card pair. So that's why we are having a buy in New York. It will buy like for the next 2 hours. So it's just going to go upward. But we have everything. The rate, the buy program activation, church here, then entry on a mitigation block, breaker block, or a fair value gap. Because that zone here, it is having relatively almost everything here. That zone, that is a fair value gap zone. That same zone, to make it that strong, here it is the same, a mitigation block. So you find like it has all elements to hold price to go upward. So this was a simple buy setup for card JPY that it is just rolling. So the pair that I shared was which one? It is this one. This is the one that I shared in the group. You're getting it. This is the one that I shared in the group, and it came back. Now we are pushing to that zone. So it might reach there by probably tomorrow or even next week on Tuesday. So we are on a buy program. We are just going here. If you look at it, if you look at this, we have in the curve. This is the sell side of the curve. Then this one is the buy side of the curve. So how do you enjoy this pair? You will use every down close, up close candle here. You see any buy candle here or any order block here. It becomes a mitigation block for entry. Here, you're getting it. So this one is an entry which is happening here. So what do we need to see? We want to see price passing through, coming back, then we buy up to here. Just as it. Because there is nothing now above, only this one. That is another mitigation block, which is up here for us to enter a buy from. So we just wait for price to penetrate through, comes back inside, then we buy and reach this zone. So this is a clear market makers border. We are just on the buy side of the curve. Here, this is the buy side curve. Then here we are having what we call the sell side curve. Sell side curve is there. So this is original consolidation, smart distribution 1, distribution 2, smart money reversal, buy program activation rate, church, FVG mitigation block entry. This is the low risk entry. Here was high risk, but here is low risk. Then here there's another low risk entry. So we shall have a low risk entry here. Then there's a low risk entry here. Then we push it until we reach this zone here. So when you look at this through it, you're going to see these are clear market makers buy model templates that it is easier to trade this kind of move than you entering from here. So you wait until this buy program is activated. Then you wait for price to create a chart. You're getting it. Then after creating a chart, you see whether there's a mitigation block, a fair value gap, or a breaker block here. You enter. As you enter, if you miss this entry, you wait on this side here. You see where there's NFL order block. You wait for price to go through it, comes back, then you enter again. So if you missed here, you wait for it here to go through, then comes back, then you buy. So that is how we trade. This is how we trade. This is how we look for this kind of setup. But the tech days, if I put this separator, you're going to see this is Friday, Thursday, Wednesday, Tuesday, Monday. Are you seeing that this move here, this was a manipulation move? It was telling people that we are selling on Monday, Tuesday, Wednesday, that we are selling. Then yesterday, it created the smart money reversal. Then today we are doing the continuation. So always the market will first manipulate, going in the wrong direction. But remember, at the back of your head, you know this price is still buying. So it will manipulate, remember, the high and the low of the week will form on Tuesday or Wednesday, but 70% of it forms on Tuesday. So it manipulated Monday, Tuesday, then Wednesday. It came, swept this low, then created. Yesterday, Thursday, pushed. Here there was no entry. Today there was entry. Then another entry is coming. So you wait for this price to create a narrative, to create a story. And the story must be easily interpreted. The story must be true, and it must be visible. You must be in position to interpret those stories. So these are stories which are interpretable. We are not guessing them. We are interpreting the story. So another pair of JPY. Let me look at USD JPY. This is USD JPY. We start with the higher time frame. Start with monthly. Whatever thing you do, don't be lazy. Always let your monthly be your friend. Your higher time frame, let it be your friend. So we need to get a range. So we are trading in this. This is the bigger range. This is range high. And we are also trading inside this range low. So it shows price is coming from this discount, this range low, going up. So up here, we need to reach this range high, which is our original consolidation. For this range, so price came, it is coming from down. Created here, smart money. We had a buy from this fair value gap here.
What is the name of that box, comma?
The name of this one?
That box,
it's called gun box. Is this one here? We count 1, 2, 3. When you come here, it is this one. So if you're to activate it, you tap on it like this. In your trading view, it will appear with very many boxes, but for mine I'd already activated, like I've modified it. So when you tap on it, it will show you two levels. There's this level, price level 1, like that is the price level. Then it will show you the time level. Now under time level, you delete, you unmark all this. You unmark them. Then under price level, you tick 0, you tick 1, and you tick 0.5. Then it will show you this. But when you open it, it will not show you this. It will show you like very many lines inside. But after you need to modify them, you on price level, this is price under style, there's price level. Then you do what? You untick this. Then you tick this 0, 1, and 0.5. Then you untick others. Then you come to level 2, because this one time level, this second level, you will see all of them tick. Then you untick all of them. Then now you can adjust on this background colors, so that will appear a bit smooth. So that is how we come about this. You can do it on your thing, on your trading view, then you understand it. So now we are coming from this low, this range low, or this discount. We are going to this premium at this high. Now what do we need to do? We need to see the key level. Here there's no key level I can mark in monthly. I go to weekly. So when I come to weekly like this, here there is some key level. We use the swing low. Then we also use this swing high. So we have our range. You can go today to get that same range that I've marked here, like this. So this is my daily. So inside my daily, I'm going to have a smaller range here from this low to that high. So price was coming from this low. What do I need to see? A sweep. It must be the origin of the move. It swept here. So when it swept, price came, it created what we call change in character. You see this? This was a church in daily. So after creating a church, it created an order block here, so a breaker block here for our entry with this fair value gap here. So both they are strong. So price came back here, then we just bought. Very normal setup. So I go to H4, I want to just, you see, that same zone I've marked. This is the setup in H4. I think how it was simple. In H4, where is the red? You start now marking. This is the red. Then where is our buy program? This is buy program activation. Next, where was church? This is changing character. Then our entry was this breaker block or mitigation block of fair value gap here. So there was entry from there. Now, you see this same thing. This is how we trade. We were just having a framework from this high to this low. Then price came into discount. We wanted the sweep to happen. It happened. It created the short entry. This was the first entry. Came back. Now this is the second entry. The first buy was here. Then this was the second buy, which we are completing now. It is just written here. That was the second buy. So today, because we are having CAD news, sorry, we are having USD news here. There's new USD news here. So what do we need to do? The same pair, you look for a mitigation block. I told you, you see, here, this was a mitigation block here. Price went through. I told you, it is a failed order block. It went through, then came back here, then pushed. Sorry. It went through this mitigation block or order block, then came back inside, then bought now in New York. So what did you want to see? You want to see if there's a sweep. So I go to H1 to see if there's a sweep. There I don't see. I need to see a short-term low. Now here there is this short-term low. See this? Price came, swept here. If you're like me who like trading on H1, hour one mostly, I stop here. You're getting it. Now the only entry I would make after this candle closing above this one. That's when I will break. This is a fair value gap entry. That's when I would make. But other people use a smaller time frame, M30, M15, M1. You see, let's see how it is more clear now if you come to M5. The same logic came. This is the same thing. A red is here. A red. Then a buy program activation. Then we need to see change in character. So this was the chart here. Being a Friday, it is a very delicate, it is a good day, but at the same time, so price, you see it came just up, then pushed up. This is the buy opportunity that we had here in New York today, inside this pair. So you have seen like the same logic, everything is just the same. It is similar. If you fail your stop losses below, they are just the same thing that we are doing over and over. So another pairs for JPY, we have this Euro JPY. We are just doing JPY and you see, you're going to see like all of them, they are just the same. So we are having this Euro JPY. I start with monthly. This is my monthly. Now this monthly, there is no key level here. I go to the next. Now when I go to the next like this, I also don't see a clear key level. I go to the next. Now in daily, this is where I see a key level, where I mark my swing high, get a range, and also mark my swing low, orange low like this. So when I have this, I use my gun box to see where price is coming from and where it is going. So price is coming from discount, which is below 0.5. And what is in that discount? It is having what we call a fair value gap there. So if it is having this fair value gap today, already it is inside. Then the price started sweeping liquidity. See this low here. Price swept the low of Wednesday. So I come to H4. My network. So I was showing you this this pair of what? Of Euro JPY. So when you look at it like this, when you come here, are you seeing the sweep of liquidity? I think this sweep, this is where price is now moving from. So where is our entry? For us, we want to make an entry when price has done what? It has created a chart. So you start marking this thing. You mark the red, which is here. Then you mark by program activation, which is this one, a two source of. Then you mark change in character, which is here. So we are having all those elements. Now, where is our entry? There's this fair value gap here. This was just a simple basic entry, that FVG. So there was this entry from this fair value gap here, that FVG. So where is our target? Where is price going to? We are coming here. This is a first take profit 1, then this is take profit 2. So when you look at this, you just wait for your entry in New York. And New York came, tap, then push. Already we are finishing the candle 5 p.m. The next candle will be up to here. So it will be done. This was just a clear buy setup. This one, it was very clear buy setup. You see, it is just like the other one. The same thing like Euro USD. The same thing. So we are just heading here. Now, how many pips just go from here up to here? This is 100 pips. This one alone is 100 pips. It is done. But you have to wait. You don't need to enter from here. You enter when everything has aligned. When you see a clear chart. See now in our one, our chart was more clearer on here. You see this? After this price closing above, immediate, you know now your entry is going to happen from this mitigation block when it brings like this. You know your entry was going to happen. So price went back, then you go with it. So you wait for everything to happen. You don't just hurry. You wait, you relax, you watch it, you see how it is going to happen, then you make an entry. It's just something which is boring. You just feel like you don't want. But you just wait for it and everything will happen. So this is Euro JPY. I'm just doing JPY to show you like how those setups form. The other pair, I'm going to show you GBP, JPY. Why is it not coming? Any question before I continue? Any question?